All right, Matt. First off on the show, I wanted to talk about the fires out in California. And, first off, for all our listeners, just want to say, our thoughts and prayers out to everyone that's been affected. There's been multiple people who've passed away or been dislocated from their homes, some people that are still missing. But since we're an investing show, we want to talk about how these sorts of things are going to affect investors. And the biggest story this week related to the California fires has been PG&E. PG&E is the largest utility in California, has over 5 million customers, and it's down over 50% this week. I saw this morning it was down again another 20%. Over rumors that a defect in their equipment may have been to blame for causing the wildfires that are really ravaging California right now. Matt, I just want to ask you, investors in a company like PG&E, they bought into a utility stock that's supposed to be stable, pay a dividend over time, be very predictable. And now you're seeing this liability coming up from the fire that has really just changed the whole narrative for the company. When you encounter situations like this in your holdings or your investments, what do you think is the best, appropriate way to respond to something like this that just comes out of nowhere and just changes the entire dynamic of the business that you're holding?
Yeah, I mean, this is a tough situation. Again, my hearts and prayers also go out to those in California. My uncle lives out there. I know that they've experienced some just the smoke in the air is making the air quality bad. So it's a tough situation for those people out there. So it is hard to then switch gears and talk about investing. Investors are just losing money, which nobody wants to lose money, but losing your house or your life, so I guess an investor should frame it that way first. It is money. It's really not ever fun to lose money, but and especially the type of investors that would be in a stock like this, they're looking for the dividend. It's the low risk investments, and it's a reminder to us all that there's no such thing as low risk in investing. There's things that come out of nowhere. There's the BP disaster a couple of years ago. And, where that company, they made a mistake and, created this huge environmental disaster. In this case, we have the fires here that potentially were caused by an electric malfunction. If that's the case, it could really devastate the company because they could be held liable for a lot of this damage. I saw that they had taken out their line of credit, so that the banks basically gave them a credit card and they maxed it out and put that cash on their balance sheet, and that's kind of preparing themselves for not being able to access money in the future. If they're held liable, they're not going to be able to issue bonds or sell stock. So it doesn't look good for investors here. I saw this happen a lot during the oil market downturn, where companies that were about to go declare bankruptcy, they would max out their credit facility so they have that liquidity. So, I wouldn't say rush out and sell because you don't know what's going to happen, but it doesn't look good for investors in this stock.
Yeah, you're exactly right, Matt. I mean, it's just hard to know where to proceed from here. There's so many unknowns. I mean, if it turns out that they're not liable, I mean, of course you've got, a double, if it were to return to the previous levels, but it's just so hard to know. And there's just so many question marks in the air.
Yeah, I would not be buying hoping for that to happen. I mean, as a human being, you hope that, the fires are put out quickly and that, for the people that work for this company, that they don't go bankrupt. But I wouldn't be buying on that hope.